Have you ever wondered why some investors seem to build empires while others struggle to keep their businesses afloat? Why certain families have managed to accumulate and preserve wealth for centuries, while the majority of people lose their fortunes within a single generation? The secret is not just in finding the next big opportunity or predicting where the market is headed. The real secret lies in something much less glamorous, but far more powerful: the ruthless, disciplined analysis of operational costs. And today we're going to take a journey across history, across the rise and fall of empires, across the foundations of modern investing, to understand how the ultra-rich have always used cost analysis as one of their most powerful weapons. By the end of this video, you'll see your own financial decisions in a completely new light. Let's go back thousands of years. Imagine ancient Egypt. Pharaohs were not just kings, they were the ultimate investors of their time. Their projects were pyramids, temples, irrigation systems, and their wealth depended on grain harvests. How did they secure such massive building projects? They didn't just demand resources endlessly. They had scribes and overseers who recorded every loaf of bread, every laborer, every tool. This was cost analysis in its most primitive form. Because even a pharaoh knew, if resources were wasted, if labor wasn't allocated properly, if operational costs ballooned out of control, the empire would collapse under its own weight. Fast forward to the Roman Empire. Roman legions weren't just fighting machines, they were logistical masterpieces. Every campaign required precise knowledge of how much grain, water, weapons, and money would be consumed. Generals who failed to calculate costs lost wars. Generals who mastered costs expanded Rome. Doesn't that sound like modern corporations? Whoever masters operational costs masters the market. Now jump to the Renaissance. Merchants in Venice, Florence, and Amsterdam were building the foundations of capitalism. Ships full of spices, silks, and gold sailed the seas. But these merchants knew something crucial. The fortune wasn't made by selling goods alone. The fortune was made by controlling costs. How much it took to hire a crew, to repair ships, to ensure voyages, to minimize losses from storms and pirates. Merchants who didn't analyze costs lost everything on a single bad voyage. Merchants who did built dynasties. Even today, when you hear about family fortunes in Europe that go back 400 years, you can bet those families mastered cost analysis. Then came the Industrial Revolution. Think of men like Andrew Carnegie, John D. Rockefeller, and Henry Ford. They didn't become ultra-rich because they simply sold steel, oil, or cars. Although all these men mentioned were not virtuous in many ways, they became ultra-rich because they mastered efficiency. Carnegie knew exactly how much it cost to extract every ton of steel. Rockefeller didn't just sell oil, he controlled refining, distribution, and relentlessly cut waste. Henry Ford revolutionized manufacturing not only by producing cars, but by cutting operational costs with the assembly line. Wealth flows not only to those who innovate, but to those who analyze and control the hidden numbers behind innovation. Now, let's move to today's ultra-rich. Warren Buffett doesn't just look at stock prices. He studies a company's cost structure like a hawk. He wants to know, what are the operational costs? Are they scalable? Are they efficient? Can they be reduced without destroying the business? Jeff Bezos built Amazon into one of the most powerful companies in the world by obsessively analyzing costs, logistics, delivery, storage, and operations. Every box that leaves an Amazon warehouse carries with it years of cost optimization. Do you see the pattern? The ultra-rich don't see cost analysis as boring. They see it as the sharpest sword in their arsenal. Now here's the uncomfortable truth. Most people never do this. Most small business owners don't really know their operational costs. Most investors look only at revenue and ignore the silent monster eating their profits. And most individuals, yes, even when managing their personal finances, fail to analyze costs properly. Think about it. How many times have you looked at your salary or your business income and thought, I'm doing fine, only to wonder where the money disappeared at the end of the month? The ultra-rich don't make that mistake. They don't just look at what comes in, they obsess over what goes out. And that's why they keep winning. By the way, if you were starting to realize how this hidden principle of cost analysis has shaped wealth through history and continues to shape the fortunes of today as billionaires, then you're in the right place. Here at Investor School, we uncover the truths about money that the wealthy have known for centuries. So make sure you hit the subscribe button right now, because you don't want to miss the lessons that can change the way you invest, the way you run a business, and the way you build wealth. Here's the paradox of wealth. Making money is exciting, but keeping money is an art. Think of history's biggest collapses. The French monarchy drowned in debts, blind to its costs. The Soviet Union was economically unsustainable, with operational costs devouring productivity. Even massive corporations like Enron or Lehman Brothers ultimately fell because costs spiraled out of control and transparency disappeared. In contrast, the ultra-rich who endured, the Rockefellers, the Rothschilds, the Buffetts, became experts of trimming, tracking, and leveraging costs. This isn't just a business principle. It's a universal law of wealth. So how can you apply this to your own investments? When buying stocks, don't just look at revenue. Study the cost structure. Is the company burning cash on operations, or are they masters of efficiency? That's often the difference between a stock that thrives and a stock that crashes. When running a business, break down your operational costs. Where is money being wasted? Where can processes be automated or streamlined? The ultra-rich know that even saving 2% in costs can multiply into millions. When managing personal finances, track your own operational costs. Your rent, your subscriptions, your lifestyle expenses. The rich see themselves as businesses. Every household has operational costs. Are you analyzing yours like a CEO? History keeps teaching us the same lesson. Empires fall when costs spiral out of control, and fortunes rise when costs are mastered. From pharaohs counting grain, to Roman generals calculating supplies, to Venetian merchants tracking voyages, to Rockefeller cutting waste, to Bezos optimizing warehouses. The story of wealth is the story of cost analysis. And here's the real question for you. Will you live like the majority, ignoring the silent erosion of your wealth? Or will you step into the mindset of the ultra-rich, analyzing, optimizing, and building a fortress around your finances? The choice is yours. In the next videos here on Investor School, we're going to explore other hidden strategies that the ultra-rich use, things you will never hear in traditional financial advice. But remember this, wealth doesn't begin with luck, or timing, or even genius ideas. Wealth begins with mastering the fundamentals, and cost analysis is the foundation stone. So subscribe, stay curious, and let's keep uncovering the secrets of how the world's wealthiest investors think. Because when you learn to think like the ultra-rich, you stop playing the game of money, and you start winning it.